Hello and welcome everyone for another weekly session here for StashAway with a new market update and some learnings for everyone. Today I actually have not Freddie with me, our chief investor. Today we have Michele, our co-founder and CEO, which a lot of you have probably met before or seen before on the news or at one of our events. So welcome.
Thank you. I'm super happy to be here and taking this place for today. So I'll do my best to think about what happened over in the markets in the last week and see what we can learn from it and how we can look forward to another investment week, month, year, and years ahead.
So today, actually, for everyone, a little bit of homework at the beginning. We will have another few events lined up for the next few weeks. So the StashAway Academy, as you've known from previous weeks, is going quite well. And next week we actually have an event on the 17th. Which will be on Tuesday, and it will be how to plan for your retirement. So if you want to take part of that, please feel free to go to our Eventbrite or StashAway Facebook page to sign up for that. And the week after, we're actually going to have Freddie, he's going to do a deep dive seminar on our asset allocation framework, and that's going to be on the 20th of February. So if you're interested in those at all, you can happily go to our StashAway Eventbrite page or Facebook page. And as always, before we get into this, into the topics today, feel free to put any comments or questions you might have underneath the video, no matter where you see it, if you see it on YouTube or if you see it on Facebook, we'll definitely get to them. Actually, today we have one that was under the video last week that we're going to be discussing today as well. With that being said, let's get started. So we had a pretty muted Asian news week because of Chinese New Year, hence Freddie being still gone on holiday as well, right? So there was not much coming from Asia, but we did have the big event on Tuesday after a long delay because of the government shutdown. It was Trump's State of the Union address. Maybe you can share with our listeners a little bit about what did he talk about, kind of what are the net impacts for all the all those headwinds that we had already from last year coming still into this year not being resolved.
Yeah. So as you mentioned, the State of the Union was actually delayed by a couple of weeks. You might remember Nancy Pelosi and Trump discussions on border wall funding and Pelosi kind of winning the argument so far at least and pushing as part of that discussion, pushing the State of the Union down for a couple of weeks. It happened a couple of days ago. It was very long, it was 84 minutes long, and if you look up, the reactions to that have been very different. The Republicans have said it was a great speech, and the Democrats have said it was horrible. And it's not surprising. I think we're living through a time where the US Parliament is divided and more divided. You might remember that when the Democrats won a lot of parliament seats a few months ago, the markets kind of cheered to that news, thinking that an actually locked type of parliament and Congress will actually not make extreme decisions that will hurt the markets.
And which is actually already happening, right? And this is why Trump was during the State of the Union address, he was appealing. On one hand, was kind of against the Democrats, of course, right, touting his things. But he also knew to try to play nice a little bit because without them, there's literally nothing he can do this year, right?
Yeah, and you're right. He tried to play a little bit of both parts. It looks like though the anonymous, the kind of the discussions between the two groups is a bit too animated right now to put it too quiet. I think one of the things that became the most famous of this State of the Union address has been Nancy Pelosi reacting to one of Trump's affirmation with a kind of a clap that was read by most commentators as ironic, to say the least.
There's a lot of memes out now.
Exactly. You can look it up.
Yeah.
And but to your point, I think what's coming out of that discussion on top of the main topic, so Trump not backing down on border wall, right? So keep talking about the wall and is kind of promising to everybody that he will get it done one way or the other, and also announced that he's going to meet Kim in Vietnam this month, so trying to kind of continue the conversation started in Singapore with North Korea. But on top of it, I think the main topic here is really the kind of a lack of common ground between the Trump and the Republican on one side, and the Democrats on the other side.
Yeah, and I think that you could see that in the market actually on Tuesday and Wednesday because the markets were actually quite good. Last night was one of the things where they turned down a little bit, and today in Asian time too, not to look into too much into daily activity, but it was interesting because it also was again, because when me and Freddie talked about this many times, right? One tweet from Trump can move the markets right now on a daily basis, not on a more monthly or like quarterly basis, but on a daily basis, and he did it yesterday, right?
Yeah, and I think in the last couple of days been a reaction to some of the kind of news, and in particular, I think the latest movement that we are seeing today already is related to the fact that Trump or people in the Trump on the Trump side said that there will not be a meeting between Trump and Xi, so Chinese and the U.S. government will not meet before the deadline for the kind of discussion on trade and on taxes, and that obviously is kind of hurting the markets significantly. Yeah. But you've been talking about it for quite a few months now on a weekly basis with Freddie, and so maybe you're actually best positioned to think about how should we think about it from a market's perspective? Yeah,
it's very interesting, and I think we try to drill this home quite a bit, also all through October, or pretty much September, October, November, December, when we had the recession correction in the markets. I think it was really interesting, right? We kept telling people, these are all noise, right? It's a lot of market noise. They have short-term volatility, yes. It's up and down volatility though, right? So people didn't feel the volatility up in January that much, right? Yeah. Because it was up. It was a very nice volatility, but it's still called volatility, right?
Yeah.
So it's very, so from that perspective, I think in terms of markets, I don't think it has much say. I think the fundamentals of the economy are still very strong. Nothing has changed from last week, that when Freddie went into the details of the leading indicators again. And from that perspective, I would not put too much noise in it. It's part of investing, and it's part of reaching your goals, right? And I think maybe you can explain a little bit a reminder for people, right? We talked about dollar cost averaging last week as a great tool in your arsenal to make sure that you systematically put money to work towards your goals in life, right? But a lot of people, what happens is also in their psychology is my account shows me red, or I'm down in the market right now. And then as soon as it gets to break even, they feel like, oh, now I've endured it, right? Now I need to take it up, but that doesn't change their goals, right? So
yeah, I think the learning from the last 20, 30, 40 years in the market, but even for people that are starting more recently, the last 12 months in the market, is that markets, especially stock markets, are volatile, and they go up and down on a daily basis. Actually, if you look at hourly, they actually go up and down hourly, or by the minutes, by the half hour, and you can spend your life just looking at that going up and down and trying to maximize when to invest your extra $1,000, $2,000, $3,000, $4,000, but that's not what's going to make a difference versus you reaching your goals. Yeah. So as you rightly mentioned, the right approach is always the same, which is make sure you have a goal, make sure you have a plan, and trying to stick to that plan as the markets go up and the markets go down. I've seen, I've been following you and Freddie, and I remember in December when the markets were going down significantly, you guys kept saying, this is a correction, the economic data are still positive, you guys should stick to your plan. So if you have a dollar cost averaging strategy, investing monthly or weekly, keep doing that. And people that have kept doing that have been actually rewarded so far. January so far up to the 6th of February, the markets went up from 9%, the S&P 11%, Nasdaq, exactly, and STI. So even Singapore was up significantly, 3.5%, much less than the US, but still significantly up. So point being here, don't get overly excited by January incredible numbers. At the same time, don't get too frustrated when another December happens, if it happens. And yes, Trump not meeting Xi will create further volatility. So until there is a clarification in the market, you'll see a lot of ups and downs. The reality is that 2019 is probably going to continue to be a very volatile year. So you can't expect a straight line up. That's not what investing is.
No, absolutely. And then starting in November, the U.S. starts being the election for 2020 starts pretty much a year early, right? So we have that coming too, which creates some volatility, but also a lot of nothing happening in the government.
Yeah.
So thanks, Michele, for that explanation. And we had one question. We kind of already discussed it now, but Jay, how from commented on our Facebook video last week, and he asked, is the US or are we worldwide actually going into recession anytime soon? I think we kind of just covered it, and no matter if even that happens, and no one can predict it, right?
Yeah, so predicting it is very difficult. Now, right now, when you look at the US, and I think Freddie has mentioned it a few times, right? So the US still has very positive economic numbers. And in fact, actually part of Trump's State of the Union address, he talked about the economic miracle, and he said it is going to break only if they if they keep investigating him. But other than the Trump investigation, the fact that the numbers have been showing and still show very, very positive and a very, very positive economy is still true. And the latest employment data has been positive, so every indicator seems to be going in the same direction. Globally, as Freddie has mentioned quite a few times during these sessions, we have seen actually the economy slowing down a little bit. China has been slowing down a little bit, still growing, but not as fast as it used to. So to answer Jay's question on whether we are heading into a recession soon, nobody should predict that, so it's very difficult to predict, and you shouldn't try to predict it. But if you look at leading indicators and if you look at where we are right now, it doesn't seem the case.
No, and I think you can also mention then on top of that, right? You just mentioned the US still doing really well. China was lagging a little bit last year. There's still no recession in sight like that in that way. But having a diversified portfolio makes all the less painful, right? So you take advantage by rebalancing also from things that you work better, get sold. You invest in maybe emerging markets have not done really well last year, even worse than the US, right? But they've been doing really well now on the recovery, of course, right? Because this is always how it works. So having just a balanced portfolio will cushion everything a little bit, and you still take advantage of everywhere in the world, right? It's not this 2008 financial crisis was a global one, but 2001 was U.S. tech mostly, right? So I'm just saying you don't always have recession everywhere at the same time.
Yeah, and look, and this is true also in the good months and on the upside. As I mentioned earlier, in the month of January, the U.S. has done very positively with 9% up the S&P, 11% up tech, Nasdaq. Singapore, the overall world markets have been going up, but Singapore, for instance, went up only 3.5%. Now. Does it mean that you should invest everything in the US and nothing in Asia or nothing in Europe or nothing in other asset class? Of course not. This was January. But if in January you were only picked Singapore and asset class, you would have actually made significantly less returns than if you had a diversified portfolio with part of your assets in Asia, parts in the US, parts in Europe, parts in bonds, parts in equities, parts in gold. And I think diversification is at the end of the game the key to navigate markets all the time, but particularly so in volatile times like the ones we're living right now.
No, I think that this is a good point. So again, thank you everyone so much. I think we covered quite a bit of ground here today. So thank you, Michele, for stepping in for Freddie this week. It was really good. And I will see and speak to everyone again next week. Freddie should be back from his holiday. Have a wonderful weekend, and make sure that you ask any questions in the comments over the weekend should you look at this a little bit later on. Thank you so much.
Thank you.